Okay, traders, good morning, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 5th. Great to be with you guys this morning. Hey, Mohammed, great to see you, sir. Jaya, Robert, Peter, always a pleasure, sir, as well. Good to be you guys this morning. Interesting price action to start things off. You're seeing a little bit of a move. Biggest performer on the session is the Aussie, rather. We'll go over Aussie dollar. RBA, it's just odd. You know, we've been looking for the Aussie move higher, which is great. They came out a little bit more dovish as far as I can tell, but nonetheless, that's why we don't follow that crap. The technicals look pretty clear. So we'll take a look at Euro Kiwi from last night's update, and gold. Again, we'll start off with Aussie first here on the back of the RBA. DXY, dollar CAD, with a nice little rebound here. I think you still look for a little bit of a pop to sell. And then we'll take a look back at Kiwi. Hey, Kieran, great to see you, sir. Any other questions or trade setups? As always, feel free to throw them on the message board at any point. Hey, Peter, I got SPX on there as well, so we'll take a look at that for Peter Green. All right, let's jump right in. So I do want to just start off with Aussie. Here's what we looked at on Aussie to start off the week. So really big levels that we're trading off of, and they're really, really clean. So here's the major premise of the whole Aussie operation. Okay. As far as, you know, the downtrend is concerned, we're looking for the break of this downtrend resistance, upper median line parallel. The biggest level of resistance here is still going to be 73.27 to the upside. It's the 618. Here's the Aussie again on the weekly charts first, right? So we're still trading above that. Interestingly enough, we noted that even if this thing drops towards that lower or that parallel again, we're still looking to stay constructive. That's your big level of resistance. Here we are midweek in the range, right? We haven't done anything yet, really. Daily chart looks like this, and this is what I wanted to highlight. You see this median line, guys? This is the same formation we've been following since last year's high. This is January 2018. Daily chart, right? Median line, support, support, a little messy there. Break, acceleration, resistance, break, acceleration, support for a week, break, acceleration again, resistance, resistance. Was that a rebound last night? Right? There's that same slope, came down, tested as support. Here's the rebound higher. The big level on the near term, again, 73.27 is sort of your breakout level. That's to validate the breakout. But right here, you have the monthly open, comes in at 72.70. You have the 38.2 retracement of the entire decline from last year's high. That's 72.75. And then you have that 50 line, or that upper median line parallel right here in Pitchfork. So sort of a big spot, right? You're trading right into it. You have a monthly opening range taking shape just below Pitchfork resistance. It's really interesting. I'd still rather play the long side, guys, but the near term concern for me is that you get a deeper pullback from here. I'll show you the near-term chart in a moment. Ty says outside day. Ty, I'd be the first one to scream outside day if we were towards the end of the session, but we haven't even opened up a U.S. trade session yet. So all things held constant, Ty, at this, if we were to close at these level, absolutely. Outside day reversal, off slope support, for me, that'd be a decent constructive trade. And some symmetry here, Jackknife outside day reversal, 2 days down. Jackknife higher, 2 days down, right? Jackknife higher would be cool. But again, we haven't even opened up U.S. trade, so it's way too early to call this an outside day reversal just yet. Here's the near-term chart, and here's what we look like into the Sunday open. So no change to any of the daily levels, right? All we did was pull back into that same slope I just showed you. That held. So now we're trading right between this region right here. Here's the intraday chart, right? There's that down channel I was looking at earlier in the week. 72.25, right? 72.14, 72.03. We said even if we get a stretch down into that region, that would be a nice opportunity to fade. we stretched just lower. I think we registered a low at 71.93, if I'm not mistaken, right? So we got, give me a 7 pip allowance. But there's the reversal, and here's the move higher. So we're checking slope resistance, same channel that we were looking at, guys, earlier in the week or on the Sunday open, right? Here we are. So I'm still thinking nothing's changed. Still thinking you look for that target 72.75, 72.93 is the 200-day moving average. Get through that, 73.27, that same level that we were talking about. Does bode well for the fact that we broke on this reversal here, moved higher, went through weekly open. We just failed at that parallel or that slope. So basically, if this pullback has, I expect to see one last leg lower here, maybe a third wave pattern to the downside, but we're ultimately looking for near-term exhaustion on any pullbacks in price. So something like this is what I was looking at earlier. Okay, so here we are at the 38.2. That's 73.27 near term. So even if we set back a little bit deeper into 72.20 or so, I still want to, I want this region at 72 to be respected as support. That's the extremity. That's the maximum extreme I want to see the pullback get down. So 72.20, I think that'd be an opportunity to get back on the long side. Top side targets still need to be mindful of 72.75, 72.90, that 200-day moving average, and then that would be the breakout region to the upside. All things held constant, though, looks pretty good. Looks pretty good. Any questions on Aussie? That pretty much spans it for Aussie data for the rest of the week. So you're going to pretty much look for the dollar take price action cues from here on out. But initially on the pullback, what a great spot to turn from. So I'm encouraged, looking for further support. Need to see that break above 72.75 to get this thing going. That is Aussie dollar number one. Kieran says, I thought there was an update to enter trade test of 72.35. There might be. Kieran, keep in mind, if you're newer to the session here, by the way, I saw your previous message there. I apologize about that. But a quick update. Remember, we're working with two separate strategies. So Jamie might have a swing trade update that has an entry and exit. Don't let that affect what we're doing here in the swing and vice versa. So we have two separate trading styles, Kieran, and that's the sort of beauty of the service, is that a lot of guys who are more near term will mess around with the intraday updates and setups, and some guys have the longer term guys are just strictly on the swing. Some guys play both. It's completely up to you, but yep, got that. Okay, cool. Cheers, Kieran. So that's what I'm looking at with Aussie. I like it. If you're not holding longs already, look to see if you can't get another setback. 72.20 would be the ideal entry. Don't know if you get it. Ultimately, if you do break that 72.75 target, I think we're right back on point. And again, this would be an objective break of the monthly or the weekly opening range highs, and certainly would keep things on the up and up here for Aussie. Let's circle back really quick and hit DXY in Euro. Number two, I also updated this last night as well. Here's what the DXY looked like, or this was rather on Sunday. Into the open of the week, we were looking at this rebound that we saw on Friday on the back of non-farm payrolls. Here's sort of the bigger picture. I think we went over this yesterday in Daily FX, so I'm not going to go over this chart at length here on the weekly, but you see the big picture. 95.66, the low week close that we made, still has continued to hold as near-term support. On a closed basis, we've been unable to make any progress to the downside there. So the spigot, as it were, hasn't opened up just yet, okay, for dollar. It's been, look, patience pays. I see your comment there. Same story always, huh, says Robert. Unfortunately, my friend. But, you can see from my prospect, Robert, it gets kind of tedious going over these same setups. But listen, when they break, Rob, the play is going to happen. And I'd rather that you guys be sick of me talking about the same setup over and over again and be ready for the play than for me to go back, classic, financial analyst, oh, well, back here there was a support break. Well, I'm telling you beforehand, right? So this way, if when the market moves, we're prepped, we're ready to go. 95.66 is your support. That's the weekly close we need to break to get this thing going. DXY in the daily chart looks like this. 96.10 into 96.15 would be the ideal play, right? On a spike type of failure. You got monthly open support resistance. You got the 100-day moving average. You got the 618 retracement of the recent decline of last month's range. You have slope resistance all lined up right here. Here's the intraday chart. All right. And here's basically the chart that we talked about into the open of the week. 95.90. We've tapped that. We've tried to break through it again. Not really a very strong divergence, or not divergence at all by my part. But you see the picture. Okay. So look, it's so early in the week. You have some event risk on tap. For me, it's a 96.15, 96.10 spike to fade. Or if we get back below, I want to say 95.75, but it's really the ideal scenario is a break back below the weekly open, which, the weekly open is all the way down at 95.61. So it's a big range, I know, but that's sort of, for me, what would validate the reversal back to the downside in the dollar. This is a near-term breakout, okay? You've surpassed the 100% extension. Even if it kicks back up towards 96.10, 96.15, that's, for me, this is still the sweet spot and my bearish invalidation. As long as this holds as resistance, again, because of the daily chart and the significance of the technical factors that are all lined up there, as long as we stay below that, I'm basically looking for exhaustion. Robert says, come on, it's not you, it's the dollar messing us all around. Yeah, I know. It's still, I have to, it still gets to me. The frustration still gets to me because I do think the levels are really clean. It's just this rebound here. Let's see if it has some play. Ty says both DXY and Euro at multi-year lows. Can I get the dual chart again for the photo? Thanks. Okay, so you got it. Right, Ty? Yeah, you got it, man. So this is, pretty clear for me. I still like it. I'd rather be short off 96.10, 96.15, but if we don't get that rally into that region, we break channel support, look for that break below 95.75 to get this thing going again. Ultimately, we're trying to see it lower, right? We're trying to see it lower. So that's DXY, number 2. Number 3, Euro. Let's jump back to last night's update. Here's the play. Man, if I miss entry on this, I'm going to kill someone. Oh, okay. I have a little on it, but I was trying to add some more. So here's the look. Here's the euro dollar setup from last night. Looks like we're getting some play to the downside. In Asia, here is the setup. I was looking for 1408. Why 1408? Well, if it's in simple correction, 2 equal legs off the high gives you 100% extension at 1409. Now, that 100% extension converges on slope for the current upslope that we've been in euro. Here it is on the daily chart, right? So that 50 line for that pitchfork off of last year's low is right there, okay? That's where we basically tail down into an overnight trade. We're turning just ahead of it. So I don't know, unfortunately, if we get entry on that. Look, if we make it through channel resistance, again, we're looking for resumption. Here's euro on the broader picture. There's that tag of support. Here's the intraday chart. Here's the intraday chart. So you didn't quite get the low registered at 1412, 1411 there. So we didn't quite get down to 1409. Still might get an opportunity, but basically this is sort of the area of which you have some really nice objective pivots in price, right? Look back. Here's support. Here's support. Here's resistance, and vice versa, right? The breakthrough was accelerated. You have a nice slope there, and you have 2 equal legs down there. Nice spot, okay? If we make it through the objective weekly opening range highs, that's 1460. It's where we opened, pushed into that high, move lower. If we make it through there, again, that's an objective weekly opening range break. We're looking for resumption higher. Levels unchanged. I noted that last night, 115 on the upside, 1499 is the high day close. High close comes in at 1542. Those are your two top side targets on the breakout. Now, if this thing washes out, I do a quick reminder, you have the State of the Union address today, tonight rather, with the President Trump. I don't, typically the State of the Union addresses do not offer market volatility. So right off the bat, if you do see any of the headlines with some of the financial news publications love to, run with the flashy headlines. If he does come out with something, it's not a tradable event. Let's just say that. It's not something you should prepare as if you're going to have a setup. But just know that that's on tap tonight. So if you get some sort of washout, again, 1409, still what I want to see hold as support. If this breaks 1375, at that point, 1350, 1375 are still both on the table. Whoops. Didn't mean to do that. These are ancillary targets, not our favorite scenario, right? I'm not expecting him to drop down here, but if this gives out, that's the risk. 1350 is still your broader bullish inval. Kieran says, when you post entry levels, targets, etc., do you recommend a margin of, say, X points for entry and X as appropriate? So, Kieran, from the swing side of things, we'll provide you with the entry stops and limits. That's, we are taking into account risk tolerance on that. We're taking into account our risk to reward ratio, and that strategy in and of itself stands alone. On the intraday approach, if you're using these levels, that's completely subjective. I can't tell you what your stop should be. Personally, for me, a quarter of the daily ATR is what I use as a rule of thumb. So if the range is giving you 100 pips per day, typically I'm looking for 25 on average. That's not a static thing, Kieran. It's completely based on what price action is giving me. But that's going to be completely based on your tolerance, how big that trade is, how heavy you are in the leverage. I can't help you on that one. I love the dual 120 and daily charts together. Well, Ty, you're asking, you shall receive, my friend. This is how I trade throughout the day. I always have them both set up like this, just so I can see always reference on where we are. But long story short, 1409 support here on Euro. We break through the weekly open, specifically the weekly opening range high. That's resumption. I'm looking for exhaustion to buy on dips. I'm not in this, or I did take a small position just for, giggles here early in the day as soon as I woke up and I saw this. But ultimately, I do want to see Euro higher. We're looking for this to be more corrective on the way down than any type of reversal or anything. Now, interestingly enough, that's Euro dollar. We also went over Euro Kiwi last night. Interestingly enough, for Euro Ki, so no change on any of those Euro levels. Still looks pretty good. Still looks pretty good. For the Euro Ki levels, it's a setup that we were following from last week. I just wanted to give you an update on it. This one's breaking, or at least testing the support that I needed to see hold. The whole point of this trade last night, guys, but I wanted to highlight this exact region. I said, look, the risk is lower for pullback, but if this is going to hold, and remember the daily chart, this is a huge region, right? Huge region. Remember, guys, the daily chart for my strategy, as per the intraday chart, is never more than a click away. So if you see the intraday chart, only a 20-minute or only a 4-hour, click on the previous update, and you'll always have provided for you the weekly and daily charts accompanying that. So the major function, or the major trade here, was this huge key support region, 165.20 to 165.68. I know it's a bigger region, but it's Euro Key. Here we are, right? We dropped into it last week. Here we are again. The monthly open is in this region as well. So this is huge, right? And it's a huge pivot in price. Here's your January 2018 opening range lows. Here's your opening range lows for June. That calendar month broke to the upside, rebounded. Pivot here into the December. And here we are again. Okay? Sitting at support. Sitting at support. So the premise, again, of this trade last night was to say, well, look, if this was a support bounce at this major key support region we were talking about last week, then I want to see 65, 68 start to hold support, and slope is there as well. Here's what happened overnight. We did break lower. 65, 68 is what I want to see hold as support. We dribbled down lower, 65.50. I wish you would post the charts live on your website. Yeah, Ty, I mean, I get that request a lot. And again, it just takes, we have to update these. I update these throughout the course of the day, always adapting to what price action is saying. So look, 65, 68, we're there. What do we do here? I'm personally looking for exhaustion. Okay. I don't have a trade on this yet. Your entry is ideal as far as a risk reward ratio because you're only trading against Friday's low here. So you already have a decent entry. I just don't have any triggers to put us in yet. I was looking at this on the 60-minute earlier. I was looking at it on the 30-minute earlier. Well, it looks like you're starting to mount something here. But, if we recover and we post back up above 65, 68, again, this is the January 2018 low day close. That's where I'm getting this level from, guys. And don't take my word for it. It's been a pivot in price previously. Here's your low day close from January. Here's the low from, again, right? All objective stuff. I don't want to make, there's nothing here, based on what I think or it's exactly what I see. So, we're there. If we're going to rebound, this is the spot. I love the euro rebounding here. So certainly euro Kiwi, not a bad idea to rebound here as well. We'll go over Kiwi dollar in a moment. I think that one could pull back as well. So Kiwi coming, off the weekly opening range highs. I'll come back to this in a moment, but you get the picture, right? So euro and Kiwi and euro dollar rather, both, interesting setups. I'm looking for that exhaustion on the way down here to give us a pivot back higher. Any questions on either of these setups, guys? This might actually be the entry might be already kind of there into the US Open right now. Okay, so that is number 4. Number 5, let's just hit Kiwi dollar. Here's number 5. We did an update on this one also on Sunday. And here's what it looked like heading to the open of the week. We were coming off slope resistance. So for me, the trade here was to the downside and move towards 68.70. Would be the ideal spot. Those were the former highs that you made into the opening range last week. And then also you had that 618 extension of the advance off the lows. Really nice spot. 68.50 is sort of your near-term bullish inval. That's your major key support. Didn't quite make it this low, okay, in Kiwi, but I think you still look for that fizzle out higher here, on the rally here, you look for this to fizzle out. I don't think you get straight on resumption here. So there's 68.70. You got the tag yesterday. You tested it again, an overnight trade. Here's the rebound, push higher. Here's your weekly opening range high. Okay. Even if this rallies towards 69.15 again, I still think the risk is for the pullback. So I'm not going to be trading on the long side here for Kiwi dollar. From these levels, if you were on the short side earlier on the Sunday print, or if you got that 68.70, well, first of all, I'd have a break-even stop, which would put me break-even already on this rally. But if you're holding anything from last week's recovery or last week's pullback, recovery in the dollar, that is, don't get aggressive on this, because if we do, let me take a step back. Here's Kiwi on the daily chart, right? This is the whole problem. The whole focus for me was this pullback off 69.30, 69.22. You had a nice reversal candle off that region. Okay, you had a 50% retracement, 618 extension off the lows from last year. The monthly open is there, slope is there. So you got that reversal, right? I still think this makes a move towards the median line before resumption. I might be wrong, but I'm just not willing to play the long side from these levels. So look, if it breaks through 69.30, the problem is you still have 69.70. It's only 40 pips away, and that's 2 equal legs off the monthly low, yearly low at this point. And then you have slope there. Same parallel slope resistance off the highs from 2017. Remember, we took a parallel of that last year? February, March, break, acceleration, converges on the same spot. So I do think you get 69.70, but for me, the play would be if we get towards the median line, get entry there as close as you can, and then look for the final stretch. If we just breach higher here, that's still an area of interest for possible exhaustion. So with that in mind, right, that we're coming off slope resistance, that we have maybe another drop to the median line before we start to rally again, that's what I'm focused on here. That's what this was. That's what this is. 68.50. Any questions on New Zealand dollar? So, I guess this is tomorrow night, but Wednesday night you do get the Kiwi employment rate. So it's going to be at 4.1%. We're expecting a 0.2% uptick in the unemployment rate for New Zealand. So the change is supposed to show a gain of just 2.6. It's a previous short of 2.8 is what we got previously. So in general, it's supposed to be a weaker print than the previous month, or than the previous quarter rather. Remember, these are quarterly numbers here for New Zealand. So this is the fourth quarter read unemployment. That's tonight or on Wednesday night, tomorrow night. Okay. Any questions on Kiwi before we move off? Okay. That is number 5. Number 6, CAD. Right. So here's what CAD looked like early in the week to start off the Sunday Open. Okay. And the basic premise of the trade here was, look, we've essentially hit slope support. Okay. We broke that channel that we were following. We tested it as resistance. First targets got taken out. Second targets got taken out. This third target missed, I think, by a pip. We went over this yesterday. And the focus was for a recovery to sell. Now, ideally, to start off the week, I want to see a recovery towards 31.85. That would be a basic 38.2 of the drop, and slope was there. Now you have time decay on this trade, right? And now we're moving a little bit farther out. Last Friday's high is now the focus for me as that converges now on slope. That's a little bit lower. But the premise is we're looking for exhaustion on a dollar CAD recovery. Here's dollar CAD now. Right? So here's the recovery. Like I said, Friday's high now converges on slope. That's like 31.57. That's what I want to see hold. Ideally, we hold this channel. This thing breaks lower. You look for 29.70. If it breaks 31.57, I'm not going to be bullish at that point. But at that point, I think you risk a larger recovery before it resumes. So you look for 32 for exhaustion, maybe 32.50 for exhaustion. But that's not the ideal scenario. Ideal scenario is we spike higher. We fail at one of these two regions. Intraday, if we were to spike higher and fail off that, would be great. And then we move lower. Remember, this week, we still do have New Zealand employment rate. That comes out on Friday, 8:30 Eastern. And we're expecting, again, an uptick there from 5.6 to 5.7. So do leave room for that event risk towards the end of the week. All things held constant, you're looking for a little bit of recovery to sell. Remember, dollar CAD on the bigger picture, the big zone of support. First of all, here's slope, but the weekly chart, what I want to show you, the big zone of support, and we went over this yesterday, whoops, is right here. Huge region, huge. 100-day, 52-week moving average, 200-week moving average, 38.2 retracement of multi-year range. It's all lined up right here. Slope off the 2018 lows, all right here, 30.50. Was that it? Was that the last decline we got? Am I being too stubborn? Maybe we're not going to get that clip. I don't know. All I know is that below 32, still looking for that drop. Marco says CAD employment rate. Yep. It's supposed to be 5.7%, Marco. It comes out on Friday morning. Oh, did I say Kiwi employment? Oh, thank you. CAD employment. We do get Kiwi employment as well, Marco. That's probably why I said that. So we get Kiwi employment tomorrow night, and we get CAD employment on Friday. But yes, for this one, as it pertains to this specific trade, yeah, Marco, CAD employment's on Friday. So unfortunately, I got excited yesterday when I saw that spike and then failure right ahead of the parallel. I thought we were going to get this thing starting to accelerate to the downside, but it fizzled out right at 31.20, 31.12 again. So like it's kind of, you know, it's got me turned off at the moment, but I do think you get a playoff this week. That slope goes back almost a year. Why do you think it will fail? Ty, which one? This one? Good question. Good question. It's because for me, I think, well, let me take a step back. Ty, I don't know that it'll fail right here. But the point being is that the weekly chart has that huge confluence region just lower 30.30 to 30.50. So I'm looking for the stretch into that, the area and how we reversed, where and how we reversed on in December into the open of this year was significant. And I see the slope that you're talking about, right, which we were just talking about on the daily charts. I'll show you in a moment. But if you look at just the basic channel that we're in off the 2017 lows, right? You're not even at the bisector here. Actually, you're pretty much at the bisector, but there's room for a pullback. You could get a recovery here, Ty. I don't know that it's going to break, but I'm working under the assumption that we've made a stronger reversal off of major slope resistance here. So you understand what I mean? Like you could get a bounce, sure, but working under the assumption that we're challenging a pretty major support off of a pretty major reversal off resistance. And on the near term, and I try to break it down, Ty, as basic as I can. You're absolutely right. We're coming up on big uptrend support, but even on the near term, we're still in a down channel, right? So just because we're heading into support, Ty, that's not the justification for me to try to get bullish. That's how you end up trying to call the lows. If we break this channel to the upside, Ty, or if we break 32 specifically, then I'll look to buy pullbacks. Then I'll know that, yeah, maybe we've come off of big support. Let's play the rebound. But right now, we're still in a near-term downtrend heading into support. I'll look for that downtrend resistance, see if it holds. That'll determine what I want to do, right? And that's the whole purpose of near-term trading, Ty. So the daily chart could have a trade coming up into big long-term support, but on the near-term trend, if you're still trading within a downtrend or you're still in the downspout, our focus is there until that condition changes. Good question, though. Good question. And above 32, I'd be with you. You'd probably be playing the bigger rebound. We probably don't get to move into 30.50 at that point. That, if that materializes, then probably that was the attempt. Until we do, you're still in the downtrend, or at least the near-term downtrend. Okay, so that is New Zealand dollar CAD, rather. I keep calling this New Zealand dollar. Number 7, gold. Gold in the weekly chart looks like this. 1322, y'all know we've been talking about that. It's the 786 retracement from the decline off last year's high. It was the first breakout target from the move after we cleared that multi-year pitchfork resistance. Just note on the daily chart, we are heading into the 70 threshold. We haven't seen a 70 break on weekly, excuse me, not daily, momentum since 2011. Okay, since those record highs that we made. So literally, that's the last time that momentum has actually broken and materialized the weekly close above 70. Something to pay attention to. Okay, something to pay attention to. So, I'm not overly bullish here from these levels. I am a bull on gold any way you slice it. We went over these levels yesterday. I know, Ty, that you were in the room in Daily FX with me. So, look, I'm still constructive, basically above 1280 on the longer term approach. 1290 is the ideal support level on the pullback. That's the weekly chart. Daily chart looks like this. Okay. There's the breakout again of the multi-year downtrend that we talked about. It's your first area of resistance. Again, 786 retracement of that decline. Slope resistance, you got a near-term channel here just off the lows they made in November, 1.2 points. So it's not a major slope, but here's the resistance, pull back. Someone was asking here in the webinar, I don't remember who it was. Craig, was that you? Or Pete? What about that parallel you have drawn? Parallel support, it's a 3-point touchdown here, so you have conviction on it. There was the pivot break. Once we cleared it, offered support. Here's that parallel. Is that support, Mike? And I said, you know what? It could be. It'd be very hard pressed for me to think that this is the breakout. This is all you pull back, then you resume. But here it is. A little bit of a rebound. Not buying it. I'm not, of the mindset that that's it. I still think this thing makes another stab at it. A stab lower, that is. But, I do want to see support on that move somewhere ahead of 1302 if possible. Here's what the near-term chart looks like. And here's what it looked like earlier in the week, or last night, I guess. Boom. Okay, 1307 is a basic 38.2. You have some slope there. You're still bearish below the weekly open. So 1317 is resistance. Kieran says, was that me? Was that you? Well, it was a good question, right? So, yeah, here it is, right? You rebounded off it. The daily chart, just to put things in perspective, I'm using, these are all just parallels. So the daily chart, if you have it extending off of this high, basically has you right there. Either way, my point being is that here's your rebound, right? If it fizzles out ahead of the weekly open, basically into 1317, that would be the tell, I think, that you look at that final drop towards 1307. Again, 1302, last year's open. You have a clear pivot in price there as well. Big range. We talked about this region at length. That's ideally where I'd like to see sort of more of an exhaustion trade entry, possibly for the long side. As long as we stay below 1317, guys, it's just my opinion that there's risk for the move lower. Now, something, and we'll go over this again on Thursday's webinar ahead of the close of the week, but something just to keep in mind, guys, if this were to, and this is very, I don't want to say forward looking, this is kind of just like me, I don't know. I just want to let you know, if this thing pans out where like you spike into this region and it fails, or even if it gets a little higher, take an extension, right? So let's say like fails here or something, right? I don't know, just using it as an example. And anywhere in this region, look where the extensions line up. 618 is going to be right there at key support. 100% is going to be right above 13. So either way you slice it, if price fails in this region, look for that deeper drop towards 13, and then again you look to buy that. I don't think this is a bearish trade. We're constructive on the longer term. Robert says, Mike, what are your rules if you open a trade and it goes sideways for say 8 bars on the 2-hour? Do you close it or stay until you get stopped out and hit the target? Rob, that's a question I get often, man, and I find myself over the years giving 2 answers, and I don't like that. I'm going to be completely honest with you, but I'm just going to tell you what I think. Rob, for the most part, I'm a big advocate of you put your limit, you put your stop, let the market talk. Because I can't tell you how many times I've gotten out of trades that have ended up working in my favor. It's just that I was losing patience, or I can't tell you how many times that things just didn't seem right, and I got out of the trade and it worked. It would have worked completely against me. So Rob, I've had instances where on both sides of the market, man. So I don't want to give you a rule of thumb, but on whole, a sort of a broader theme is you want to stick with your strategy. And if you have good risk to reward ratio, and if you have a proper plan on the trade, put your limit, put your stop, and let the market do what it's going to do. A lot of times there's just noise. Now, Rob, again, I don't want to talk out of both sides of my mouth, man, but I've spoken, the really a trader I really respect that I worked with for years on the trade desk early on in my career always told me, he always used to say, Mike, if the market doesn't do what you expect it to do, what he called a reasonable time frame, typically that trade's not going to work. So with that mentality, Rob, yeah, if I'm in a trade and it's literally sideways and there's major event risk happening, as long as I'm not in the red, sometimes I'll just bail in the trade. But I don't want there to be a time limit. You know what I mean, Rob? He says right on. I don't want to set a rule of thumb where, okay, if 7 bars, 5 bars, 3 bars happen and nothing happens, then I'll get out. You're going to do yourself a disservice, you know? Sometimes that might spare you a couple of bad trades, but more often than not, you're going to end up missing great trades because the market is going to do its own time frame. So that's what I'll say on that. One thing I do, Rob, and this is something that's just in my own trading personally, if the market doesn't do what I think it's going to do over, again, a reasonable time frame, if not bail on the trade, a lot of times what I'll do is I'll just reduce the leverage. So let's say I'm in a, I don't know, let's say I took a short on gold last week because we were talking about 1322, and we sat there for all of last week. FOMC came out, non-farm payrolls came out, and this thing wasn't doing anything. Maybe into the close of the week, I'll reduce positioning. You know what I'm saying? So I'm not holding as big a position. I'm a big advocate of being extremely variable with your leverage. Don't work static. I work 10x trades in, 10x trades out. Be variable. If it's a trade you have more conviction on, go 15 on that one. Go 20 on that one. If it's a trade you don't have that much conviction on, but you just want to be in it because you think it's a really good level, go quarter X on that one, right? So leverage should be just as much of a variable of your trade as your limit and your stop. So another tidbit there. Rob, does that help? I hope I didn't go on a tangent there. He says that's a good idea. Compromise, always work with the charts. Exactly. Just always work with what price action near term is telling you. 1290 puts an ABC correction right on the equal measured move. It's a nice level. 1290. So equal measured move off what, Rob? Let me ask you that. Equal measure off this high right here, but we don't know that this is a high. That's my problem. The extension I just showed you, yeah, that would be sweet. That would be sweet if the 100 was at 12, yeah, it's at 1296, or off the high that we have right now, around 1213. That'd be 100. I don't know. We don't know if this is a high. I don't know that anything's going to happen here. But that's the mentality I'm walking into the U.S. markets with. If we spike or if we fade or get some divergence, this thing fails and starts to move lower, that extension will have me targeting basically that lower parallel. Make sense? Gold trade, man, I love it. I love it. I think it's a great trade. I think the longer term pictures are very, very clear. You're just coming off of uptrend, near term uptrend resistance. Does that mean you got a little bit more deeper to go before resumption? I happen to think so. All right, Pete, are you in the room still? Where is he? Peter Green, yeah, let's take a look at SPX for you, my man. Here's number 8 on the session. Here's SPX. So, looks like we resolved that triangle to the upside, didn't we? This is the trade we were talking about, I think, in the webinar yesterday on Daily FX. Man, really not much to do here if you're not already long. Here's the triangle breakout, near-term consolidation. There was the break of the longer-term slope resistance, right? That's off the highs that we made back here in October of last year. There's the breach. Yeah, another near-term sort of consolidation as you opened up the week. Here's the topside breach. He was asking, Pete was asking for topside levels I'm looking for. Look, I have a soft target at 2736. It's just a soft target, okay? It goes back and stems back all the way to that swing low that we made back here in January of 18. I marked it up, and then on every pivot on both the way down and the way up, we've seen acceleration, if not failure there, right? Failure, 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 acceleration, failure, 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 acceleration, right? So it's just a soft target. I have that at 2736. The 200-day moving average comes right around 2742. Here's SPX on the daily chart. There's that 200-day moving average. So I think, based on the consolidation break, on the near-term consolidation break, I think you can still make a stretch into that. But man, it's a huge pivot, Pete, and again, momentum is coming to the highest levels that we've seen essentially since the highs that we made into the 2018 calendar year. Now, I don't want that to shake you out, but it's one of those trades like in gold where you look at when's the last time you saw extremes like this registered in daily momentum. It's been quite some time. It's been quite some time. So if you're holding longs, hold on to them. I'd be fading on a move towards that 27, 42 level, but you're coming into some levels here of which may, if not, I don't want to say cap the advance, may limit things near term. You might see things get a little bit tired here. Remember SPX on the weekly chart, guys, where we are broader on the broader scheme. Put this into a log scale, right? Same formation that we've been in from the 2010, 2011 lows. Really strong rejection of that base. It's a pretty big breakout. And we are now testing the exact 52-week moving average as resistance. So on a weekly basis, again, we'll want to see a reaction at that level. Where would you have support, Pete? Let's take a look. So what you want to try to do on something like this, Pete, is you want to try to find some structure. So look, I could take a step back right now and objectively look at the lateral levels and tell you 2708, 2709 is a level to watch. Okay, again, that's not Mike Boutros' opinion. It's an objective 618 retracement, and it's also essentially the weekly opening range highs. Right, here's your open February, here's the weekly open. It was the weekly opening range high before you broke here yesterday and pushed higher. So as a lateral level, I would watch that. But the ideal scenario here is that you look for something with a little bit more slope, structure. I wouldn't say that's necessarily in play just yet either. Okay, so here's some objective levels for you, Pete. So this is the monthly open where my cursor is right now. So that puts 2696 as your objective monthly opening range low. That's not up for debate. That is a fact in price action, right? So I would have that as sort of your near-term level of support, of which if the market dumps, you'd want to see the monthly opening range hold as support. Yeah, you have the 100-day moving average there as well, right there at 27. Even more so. And then what would put me straight bearish? The only thing that would put me straight bearish on this, Pete, would be a break back below last year's open. So like here, that would be here. If we break back below 2672, forget about it. You're basically looking for possible resumption of the broader downtrend there. Does that make sense, Pete? He says, great, Mike. Thank you. Hey, you're more than welcome, man. It's been a very interesting trade, and the levels keep playing out. Unfortunately, they're not offering big pullbacks. So every time we mark resistance, you're not actually getting like an opportunity to fade. But the market just sits there, and that's resistance till it breaks. Then it's going to sit here. That's resistance till it breaks, and that seems to be the play. I would just be mindful again because daily momentum is starting to stretch towards extremes we haven't seen since the highs were registered last year. Intraday momentum, you're already in overbought, so it's not a time to try to fade it yet. If you're holding longs, like I said, hold on to your trade. Watch 2736, 2743 on the upside as resistance. If we break 2696, at that point, I think you have to allot the possibility for a larger correction here before you start to resume. Okay, and that's the SPX, number 8. Any other questions or trade setups, guys, feel free to throw them on the message board. I want to encourage you guys, bring me some pairs that you guys are interested in trading. I've been kind of ringing myself around these majors for the last couple of weeks. I've been just sitting in this nest of majors. The thing, I hear a lot of you, or some of you have been asking for some of the yen crosses. The thing that's been kind of turning me off, guys, is that big fat finger, flash crash. A lot of the pairs that have the flash crash, guys, for me, stay off the table for quite some time. Here's euro yen. Uh, Ty, I know that you always watch this trade, and I was looking at this. I published a piece on Daily FX yesterday. This is a basic 38.2 of the range from last year's high. Okay, it's also swing highs that we made back here in May of last year. Big level. Watch how this happens. We have a 4-week advance. This would be the 5th week of consecutive advances. Um, all these trades that have the flash crash. Look at the intraday chart. Even the weekly doesn't look that ugly. Intraday though, I just don't know how to play these. So if you look through the intraday page, guys, and some of the trades seem kind of really dollar centric, that's on purpose. I tend to stay away from a lot of these trades that had that fat finger until we get some further clarity on near-term price. Can we take a look at crude, Mark? Yeah, absolutely. Here's the oil trade. Let me know how you want to look at this. I was kind of checking this out yesterday. This is a trade where the broader picture that we had highlighted weeks ago is actually like ridiculously clean. It's funny because I'm getting emails now, like months later. Finally, I got a lot of heat on this one into the close of the year, asking for support. This is the first level, okay, 55.55. Not surprised to see some kickback here. Mark, we could get even a deeper cut, but I'm working under the assumption still that crude put in a big low there, okay, into the close of the year. I think this is still, let me take this off log scale. I'm sorry about that. This is not up for debate, in my humble opinion. This is a 618 retracement, critical retracement on critical multi-year slope. You bring it into a line chart. It just looks ridiculously clean. It looks like a rebound off of uptrend support, plain and simple. This would be your first area of resistance, and that's where we're getting resistance. So yeah, I think crude could pull back a little more. Okay, that allots for a little bit of a dollar recovery. But I do think ultimately you look to buy that pullback. Here's the trigger break that really was the onset of the spill that you saw last year with a really record-breaking decline in crude, both in time and magnitude. So here's that slope as resistance. So again, you could get some more pullback off here. I don't know. I do. If you put a gun to my head, I think crude pulls back a little bit more. Ultimately, I think you look to buy that. Here's crude on the daily chart. Again, there's that 38.2. You have the pivot at 53.80. It was last the 2017 open. Pretty clear pivot price there. I'm looking lower. I don't have anything structurally though to look for support on this mark, which is my problem. Even on the intraday. We added this yesterday. 618 of the recent range is 53. Actually, if we do 100 off the high here might be boom right there. Yeah, so like watch this zone. All right, these are my favorite setups. 100 off the high, 618 off the low, gives you 52.73 into 53. I'd be looking for support down there. But I do think the risk is lower for now. And also, let's see if this slope offers any help. Stop traffic, almost the same exact slope. Let's dodge this. Let's dodge this. Ew, this is a really clean setup here. Look at this, guys. Brings your bearish invalidation right up here back to that 55 level. That's the breakout level. Not bad. Not bad. First things first, 53, 52.73. I want to see that clipped. I want to see that clipped. I don't know if that's going to break, but that's sort of the pivot point. That's the reaction point we want to see. If it breaks below that, I think you drop to the lower parallel. I think your 50.61 is just a near-term target. If that holds, 55.50 is what you need to see on the upside to give way for the breakout trade. Make sense? Mark, hope that helps. He says, thanks, that helps. More than welcome. Marco says, dollar Swiss. Ooh, nah. Yeah, I'm not a big fan of dollar Swiss. I mean, look, this is the daily chart I have, Marco. I know I've known you for a while, Mark. I know you know where I stand on this. I mean maybe a push higher towards the that key zone here to short, but I'm essentially still looking for exhaustion. The same as euro dollar on the way up. Um, but yeah, this is just an ugly, ugly trade. Robert says, "Man, all the Swiss pairs are horrible. I've even stopped looking at them for now. Sterling Swiss, please. You might not like the look of it, but," says Kieran, "man, yeah, I'm not a fan of any of the Sterling, or any of the Swissy crosses, man. I just don't trade them. Period. I haven't traded them since the Swissy event, since the S&B event. Uh, Sterling Swiss, I guess if we want to take a laugh, I don't even have that on my list. I actually literally have to type that in manually. Well, it looks like a five-way, but nah. But it does look like it's coming off some sort of resistance here. Hmm. This might be a good level to sort of do on a scratch basis. I have, again, on Friday, I have that webinar on daily effects guys for the foundations of technical analysis. I would encourage you guys to show up and just bring me a pair that you guys haven't looked at, and let's just start from scratch. Because this could take some time, and we have about 2 minutes left on the session. Um, Yeah, I have no clue. If I had to put a wager on this, I would say that you're still looking for a little bit more of a pullback here. But the thing that bothers me is that I don't like what Sterling is doing. We didn't talk about Sterling today, but here's Sterling, guys, where we are now. I think the decline, now that it broke 130, does wash out. Okay, it does, or it does beg a deeper washout. Let's say that. So for sterling dollar, if you guys remember, the last update we had on sterling was right here. Okay. And the focus for me was on a move towards 130. Okay. That's what I wanted to see. Also, for me, that would have been a very clean correction. So two equal legs off the high. You had some slope that kicked out into this region this week. So it looked pretty decent for, that setback towards 130. And if it's going to hold, that would have been the entry. What was also at 130 is you also would necessitate a break of the 200-day moving average. So now that we've broken that, we've broken uptrend support, we've broken the 200-day moving average, I do think you risk a little bit deeper of a setback. So for pound Swiss, I think if you had to play that, right, I would definitely want to be short. But it's a Swissy cross. I mean, what's the point? So here's the break of 130. Just an update on that setup. No change in any levels. Next downside target from here is 29.20. That's your 38.2 basic of the retracement for the near term advance that we're in. And that's I think that's the near term risk to the downside here in sterling near term. Kieran says, I was looking for the point of view of having reached resistance. You're talking about pound Swiss. Sure, Kieran. But for me, remember, a lot of trades will oftentimes give you that prices coming into major resistance or major support or a multi-year level that you're looking at. Doesn't always mean, Kieran, that that's going to offer an opportunity from a trade setup. Remember, having an opinion on a direction is only 50% of the game. Having a viable trade setup requires us to have structure, requires us to have levels, right, mapped out, requires us to have some sort of guidance to what near-term price action is doing. So I'm with you. I love looking at broader, longer-term charts, and I do get excited when I recognize, okay, we're coming into a big level. This should offer resistance or support. But I just want to prompt you, I just want to caution you of, that kind of objective analysis, while great, doesn't necessarily mean it's going to prompt an actual physical trade. We want to make sure that near-term price is giving us that allotment. So a little note on that. He says, yes, I looked at it and it wasn't that clear apart from my seeing that the resistance. Good call on the resistance, though. It's definitely something to take a look at. But pound Swiss, man, it'll take it would have to take a pretty clean setup for me to get involved in something like that. SNB is a master at central bank management till they lose control, says Ty, right? So the Swiss National Bank, I'm sure if you're an older crowd, or even if you're not, if you've been trading for a couple of years, that's something that's kind of burned into our retina. It's sort of one of the largest FX moves we've seen in history. But yeah, ever since that move, man, I do not mess with that trade. So I don't really mess with it. Okay. Any other questions? I think I got everyone. So if it's overbought, why do you say it's not time to fade it yet? Kieran, great question. And this is something I say all the time. It's going to be redundant to some of the people in the room here, but remember, when something's an overbought, there's the tendency that people say, "Oh, that's the time to sell." Remember, it's the condition of coming back from overbought that's the sell. As long as something is in overbought condition, Kieran, that's when the market has the most push. So if you take any objective trade, okay, and look at it specifically on the longer term charts, when the market isn't overbought, the market broke into overbought in January 2018. You're telling me from January 12th to January 29th, you were trying to sell this thing? Well, it would have been a really bad month. Really bad, right? Because as long as it wasn't overbought, the entire time the market was ripping. It's the return from overbought, the break back below 70. That is your condition for the pullback. And that's a big misconception that people use overbought and oversold conditions. As long as something is overbought, for me, that's when I'm holding a trade. If I'm long, I'm sitting in that one. I'm not touching it until it comes back. That's when you start to think, okay, now there's a pullback. So, when something isn't overbought, I'll very rarely take a short while it's in the overbought condition. Because like I said, for it to get up here, that means the market has the most push, the most momentum behind it. That's not when I want to fight it. Okay. Also, a great question for the foundations course, but you have the cream of the crop here in SB, so always feel free. Guys, we'll wrap it up there. I'm over on time. Remember, Jamie's on tap tomorrow with the midweek strategy webinar, and then I'll be back here on Thursday to wrap up the week here with the intraday charts. Remember, tomorrow you do get the New Zealand employment data, but Thursday morning you get some commentary from Fed Chairman Powell. He'll be doing a town hall, not major. And we also do get on Thursday morning, right ahead of the webinar, the release of the Bank of England interest rate decision. So for the sterling crosses that we were looking at, that might be an opportunity. If the sterling grounds out or if the sterling drops deeper, look for support around 28.90s here on sterling dollar as a possibility for where that drop might find some support and inevitably continue higher. We'll go over all those trades and more on Thursday. Till then, best of luck trading, guys. See you then. Cheers.